The system is failing. You can feel the pressure. But the real mechanism of collapse is invisible. It operates in the shadows. Now, that shadow mechanism is exposed. Look to the east. A devastating figure has been confirmed. China's strategic silver reserves have surged by over 125% in the last year and a half. This is not normal market behavior. This is not diversification. This is the activation of an ancient, unavoidable pattern. History is not kind. It does not repeat, but its fatal logic always returns. Empires fall the same way. They drown the currency in debt. They make endless political promises. But the consequence is always, mathematically, brutal. The silver panic is the clearest signal. Major global players are already moving. They are positioning for the next inevitable cycle. They are quietly withdrawing trust from the existing monetary order. They are abandoning fiat currency. Remember 1971? The gold window slammed shut. That was the political moment. It was the absolute breach of promise. That decision set the stage for our current catastrophe. The logic of that betrayal is recurring right now. We are watching the beginning of the end. The global financial system is under extreme stress. The system will reset. It must. The critical question is no longer if. It is when the hidden trigger, the systematic flight to metal, will initiate the final crash. We are closer than you have ever been. To understand the silver surge, you must first grasp the recurring mechanism of monetary failure. Every great empire follows the exact same playbook. It starts with metal. It ends with metal. The first step in this inevitable cycle is debasement. Consider the history of the Roman denarius. This coin was the bedrock of Roman power in the early empire. Its value was based on its pure weight and its purity. But empires are costly. They require endless funding for constant wars and massive public spending programs. Emperor Caracalla started the aggressive devaluation. This was not accidental. It was a deliberate policy. By the reign of Gallienus in the mid-3rd century, the denarius was worthless. It was barely silver anymore. It became a copper slug. It only had a thin wash of silver over the surface. The pure metal content dropped from nearly 100% to less than 5%. That is the first shock number. This collapse of purity defined the end of an economic era. This debasement was a sophisticated form of stealth taxation. The government spent copper. They spent it as if it were pure silver. The result was inevitable. The people lost trust immediately. They started hoarding every true silver coin they could find. This hoarding is the silent, decentralized rebellion. It is the core systemic logic. A debt spiral always forces a return to hard assets. This is the pattern of trust erosion. This pattern is universal. Fast forward to the 17th century. The Spanish Empire seemed unstoppable. It was fueled by gold and silver flowing from the New World. Yet Spain fell victim to the same exact logic. Massive inflows of metal allowed for massive expansion of debt and spending. But this metallic flood, combined with military overstretch, inflated the internal economy. Spain was the world's primary silver producer, but the value of its currency unit still weakened. It weakened relative to labor and to goods. The crown repeatedly defaulted on its debts. The pattern repeated itself. By 1647, the king was forced to issue vellon coinage. This was another official token, another debased currency. The government tried to cap prices. The market ignores all political caps. The silver flowed out of the country. The debt kept compounding. The 19th century bimetallic standard in the United States offers a more precise parallel to modern tension. The U.S. initially adopted a dual standard. Gold and silver were both considered money. But the legal ratio between them was fixed by law. It was not fixed by the market. This immediately created an arbitrage opportunity. The official legal ratio of silver to gold was set at 15:1 in 1792. But the market ratio often diverged from the official ratio. When the market price of silver dropped below the fixed ratio, investors made a calculation. They exchanged cheap silver for the government's officially overvalued gold. This is the iron rule of Gresham's law. Bad money drives out the good money. The good money is hoarded. The U.S. effectively became a gold-only standard in 1873. This was a purely political act. It is known in history as the Crime of 73. This move massively centralized power. It aligned the U.S. with the dominant gold-backed powers of Europe. But it severely indebted the western and southern states. Those states relied heavily on silver mining and production. This specific cycle is crucial. Abandoning a dual metallic system is always a shift. It is a shift toward greater centralization. It is a shift toward greater systemic fragility. It removes the natural redundancy of having two hard asset anchors. The final stage of this historical pattern is the complete and final divorce from the hard asset. That final divorce happened in 1971. Before that year, the US dollar was supposedly linked to gold. It was linked under the Bretton Woods system. But the promise was only honored between central banks. It was not honored for private citizens. From 1950 to 1970, a critical process began. U.S. gold reserves dropped sharply. They dropped by over 50% during that period. Foreign central banks were paying attention. They saw excessive U.S. spending. They saw ballooning debt. They began to demand their gold back. They traded dollars for the physical metal. The gold was draining from the national vaults. This drop was the definitive evidence. It showed the dollar was severely overextended. On August 15, 1971, President Nixon took action. He unilaterally severed the dollar's last physical link to gold. It was a permanent global monetary reset. The systemic consequence of that decision was enormous. It fully unleashed the era of pure, unbacked fiat currency. This is the fragile, promise-based financial system we inhabit today. The cold logic is unyielding. When confidence falls, the money flows back to physical metal. When the government runs out of the metal, they simply change the rules. That is the systemic logic. It is the logic that has defined 2,000 years of monetary history. This is the logic of the collapse. We must now apply this recurring mechanism to the present moment. The massive surge in silver acquisition cannot be viewed in isolation. It is a calculated response. It is a response to the extreme fragility created by the post-1971 fiat system. The current global system is the most centralized and the most debased in all of modern history. Look at the numbers that matter. The global debt-to-GDP ratio. It has recently climbed past 360% globally. That number represents systemic fragility. There is no physical anchor that can support that scale of debt. The only thing backing it is a political promise. It is the promise of future economic growth and future taxation. China's current move is a sharp, clear signal. Global central banks and state-level entities are preparing for the next system change. They are not merely diversifying their portfolios. They are aggressively repositioning. They are preparing for a geopolitical shift. This shift will be measured in physical assets. It will not be measured in derivative promises. Let us re-examine the hard data. The official figure is a 125% surge in strategic silver acquisition by China over 18 months. This is the core signal. But it is only part of the story. The movement is broader than silver. China's central bank has officially reported buying gold for 18 consecutive months. They have added over 300 metric tons to their official reserves. This is the largest, most sustained accumulation effort in modern financial history. This is not simply a portfolio adjustment. It is the dedicated building of a hard asset war chest. This is the definitive pattern of preparation. Why is silver so important now? Gold is the traditional monetary metal of central banks. Silver holds a unique place. It is both the traditional monetary metal of the common man and an essential commodity for modern industry. It provides a unique point of strategic leverage. Today, over 50% of silver demand is industrial. It is critical for solar panels. It is essential for high-tech electronics. The global push toward green energy is accelerating the demand for silver. Meanwhile, its supply is constrained. This dual function, industrial and monetary, makes silver the ultimate strategic asset. It is a strategic holding for a world planning for a financial reset and an industrial supply chain war. The modern mechanism of currency debasement is far more insidious than clipping coins. It involves the direct printing of money. It funds massive government deficits. It involves artificially keeping interest rates below the real rate of inflation. This is a subtle, non-transparent form of theft. It is the mechanism that makes the wealthy significantly wealthier. It makes the poor significantly poorer. The core of the modern system is the ability of central banks to create reserves out of thin air. Look at the U.S. Federal Reserve's balance sheet. It surged from under $1 trillion before the 2008 crisis to over $8 trillion today. This is the definition of modern debasement. It is a sophisticated transfer of wealth. It shifts value from the labor class to the capital class. The response from foreign state powers is to seek shelter. They are seeking shelter in tangible, sovereign assets. They are reversing the flow of the Roman denarius. They are hoarding the true, good money. They are doing this while the world continues to transact in the increasingly suspect fiat currency. Central banks are making a calculated bet. They are betting that the mathematical consequence of 360% global debt will force a total systemic break. Only those nations holding non-fiat, non-political assets will survive this transition intact. The mechanism of modern financial warfare is to quietly drain the physical metal from the system. The Chinese silver vault surge is the clearest sign yet. This systematic drainage is now at full throttle. The pattern is absolute. Accumulation always precedes the collapse of confidence. We are not merely heading towards a financial crisis. We are already deep inside a long-wave systemic collapse. This historical pattern only ends one way. The historical process must complete its cycle. The final act in the long debasement cycle is the total loss of faith. The political promise of fiat currency will be exposed. It will be seen as a mathematical impossibility. When this happens, there will be a global, catastrophic flight to tangible value. The hidden trigger of China's silver vault surge will be pulled. It will be pulled the moment global confidence in political promises hits zero. When that confidence collapses, the consequences will be immediate. They will be brutal. The value of all financial assets, stocks, bonds, real estate will be instantly redefined. They will be redefined against physical reality, not fiat currency. We are talking about hyperfinancial stress. Prices for basic goods, already strained by inflationary debasement, will accelerate rapidly. This is because the velocity of money will accelerate. This will not be a typical recession. It will be the systemic repricing of every asset on Earth. The people who will suffer the most are those whose entire net worth is locked into the digital, promise-based fiat system. Your pension funds, your savings accounts, your reliance on government benefits. All of these are denominated in a unit of account. That unit is losing its fight against the historical pattern. The ultimate consequence of the 125% silver surge is the silent admission. The major players know this global reset is coming. It is being meticulously planned for by those who stand to gain. The endgame is simple and cold. A new global monetary system will be erected. It will be backed by tangible assets. It will be heavily influenced by them. The nations that hold the greatest reserves of gold and silver will dictate the terms of this new arrangement. The pattern of wealth consolidation will then be complete. The rules will fundamentally change. The new rules will favor those who held physical metal. They will punish those who held paper promises. This is the knowledge that should keep you awake at night. The catastrophe is not hypothetical. It has been mathematically encoded into the system since 1971. The speed of the final collapse will be determined by the speed of the flight from the dollar. That flight is being explicitly signaled right now by sovereign purchasing. We are watching the final moves on the chessboard. This is the last warning. This video explains historical and economic systems. It is informational, not financial advice or price forecasting. Do not ignore these numbers. The surge in silver is not a short-term trade. It is a definitive historical statement. The pattern has been activated. The elite are preparing their own vaults for the next system. The question you must answer is what you will do. What will you do while the political promises fail? What will you do while the clock runs down? You must prepare for the mathematical certainty. The trend is locked in place. The cycle is accelerating now. The promise is political. The consequence is mathematical. No one escapes. Subscribe now. Hit the notification bell immediately. Do not miss the next stage of the collapse. Consider becoming a member to support the cold, hard analysis that is kept out of the mainstream.